All right, so we have question number 9. Livertech. Livertech is what? Is a computer business that primarily sells computer hardware as well as selling computers. It also supplies and installs the software to its customers and provides technical support package over 2 years. The business commonly sells supply and installation and technical support in combined goods and service contracts. The combined goods and service contract sells for $1,600, but if sold separately, the supply and installation is sold for 1,500 and the technical support is for 500. If Livertech sold a combined contract in July 2007, demonstrate how the transaction will be presented in the financial statement for the year ended 27. Demonstrate the transaction. So here, this is what we call distinct goods. They have two or more services that they provide in one contract. So they have they are selling software, they do installation, and they give technical support to the goods. So here, if you decide to go for the contract where they will do the installation and then provide technical support for period of 2 years, you will pay 1,600. But if you don't want them to you don't want the total contract, but you want you want only the technical support, or you want them to do the installation alone charges 1,500 and the technical support alone charges 500. Livertech has sold the combined contract. So that means there's somebody has taken the contract to the taking the contract where the person will receive installation and the person will also receive technical support for 2 years. How do we report this? This is what we call standalone price. All right. What is the company name? The company name is Livertech. Livertech Limited. Livertech Limited. So this type is called stand-alone price. Okay, so how do you deal with it? Now you have the stand-alone price. The stand-alone price, you say installation is how much? And then installation and technical support. Okay. All right. So installation alone is 1,500 in the question. Technical support is how much? Technical support is 500. So when you add, what do you have? You will have 2,000. And now the company went into combined contract. And the combined contract total is how much? 1,600. It is in the question. That's what we call standard. So that's a combined contract, which is $1,600. So how do you report this 1,600 in the books of the company? So this how you do. This how you go about it. You list the standalone price, then the combined contract as they sold it. How do you report this 1,600? So all you have to do is you pick the 1,500. Then you divide it by by the 2,000. Then you multiply by by the total contract that they sold. What do you have? You have 1,500 divided by 2,000 times 1,600. So here will give you installation will give me 1,200. This one is 500 divided by 2,000 times 1,600. This one will also give me 400 here. So this is how this is how I'm going to recognize revenue. Now, when I'm done, then I have to understand the meaning of what we call at and then what we call over. Now, the at is revenue recognized or recognized revenue at the at the date of contract, and then revenue over the period of contract. So this two, installation and technical, where does each of them falls? When you look at the installation falls under what? At revenue at the date of contract. You recognize this revenue here at the date of contract. And then technical support is what? Is 2 years. So that one, you recognize it over the period of of the contract. You understand? Because the installation, you go and do the installation. That's performance obligation is what is done instantly. Performance obligation is what is done. So that one, you've already performed installation instantly. So that one, you can recognize what? Revenue. But technical support is 2 years. You can't recognize revenue at once. So that one, the revenue recognition will be over the period. As and when you've done or accounting year, and then you recognize revenue. Then the rest, then you defer it. You understand? So that is it about about the standalone. However, when you are performing standalone, you need to consider the 5 steps for the steps for standalone. So this is how we do it. So you pick first one, identify the contract with with customer. Yes, can you identify contract with customer? Yeah, so you can identify the customer. So there's agreement to to install and provide technical support for 2 years. You see, so you've identified the contract. Now you come here, you say agree. So that's the agreement. So the next one is identify performance obligation. So the performance obligation is installation and and technical support. And 3, determine transaction price or contract price. Okay, so determine transaction price. So the transaction price in this contract is that they will do installation, and they will do technical support. For how much? $1,600. And then 4, allocate transaction price to performance obligation. Well, so that is where you do your standalone price, and you have your combined contracts. Okay, so you have it here. You have your installation. You have your service. Your installation is how much? 1,500. Your service was 500. We give you 2,000. Okay. So when you come here, the combined contract is 1,600. I say you have 1,500 over 2,000. So 1,600. This one gives you how much? 1,200. And then you repeat same here over over 2,000 times and this gives you for 400. All right, so that is allocation of so when you are the fifth one is recognize revenue when performance obligation is is satisfied. Okay, so here you recognize so how do you recognize revenue? So I've already told you the at and and over. So here I said that the at revenue. So you recognize the installation, because that one, it is it's instant. So the moment they do that, so they take their money, and it is how much? It is 1,200. And when you look at the over, the service, That one they will do it over what, 2 years. And remember, when we read when did they contract? The contract was in what, 1st July. You understand? The contract was in what, 1st July 2007, and the accounting year is what, is, I mean, 31st December 2000. So they've only done 6 months of the 2 years. So you can only recognize 6 months of the 2 years. So how do you do that? So all you have to do, you will have your what, your 6 months, all divided by 24 months, right? You multiply by the what, by 400. How much is it?
100.
Okay, so that gives you what, 100. So they can recognize what, only 100 out of what, out of the 400. So now you can, so the total revenue is what, 1,300. All right. So that is how we account for it. Now the balance for us, the technical support. We say we have what, balance of technical support. Out of the 400, they can recognize only 100. So 400, they recognize 100. So they have 300 deferred. So this is what you watch. You do your what, your statement of what, statement of what, financial position. So in the statement of financial position, you will have what, liability. It will sit under your liability, and then call it what, deferred what, deferred income of what, of 300. Now, so this is your what, this is your what, your revenue at the end of the day. All right, so that is it about that under what we call stand alone prices. If there's no question about